Are we on the brink of a global financial upheaval? In today's video, we're diving into Jim Rickards' shocking predictions for 2024. From a potential global recession hitting major economies, to soaring oil prices and a looming banking crisis, we're exploring what could be a pivotal year that reshapes our economic landscape. Stay tuned as we unpack these predictions and what they mean for you and the world's financial future. Let's kick off with a topic that's sparking intense debate and speculation: the upcoming U.S. presidential election and the role of Donald Trump. Jim Rickards throws light on this political hot potato, delving into the constitutional nuances and the dynamic political landscape that could shape the election. But it's not just about who's running. Rickards points out the broader implications of this election on global politics and the economy. Think about it. The U.S. presidency isn't just a national seat of power. It's a global influencer. The decisions made in the Oval Office echo across world markets, trade policies, and international relations. So, the question Rickards poses isn't just who will run, but how will their policies shape our global economic future? Whether it's trade, taxation, or international diplomacy, the ripple effects are enormous. And with Trump potentially in the mix, the stakes seem even higher. Known for his unconventional approach and polarizing policies, his involvement could mean a shakeup in not just American politics, but global economic strategies. In a world still grappling with pandemic aftershocks and geopolitical tensions, the outcome of this election could be a tipping point. Moving on to a critical forecast that could affect us all: a looming global recession in 2024. Rickards' crystal ball shows economic storm clouds gathering over powerhouse economies like China, the US and Japan, signaling a downturn that could ripple across the globe. Think of these economies as giant engines that power the world's financial system. When they start sputtering, everyone feels the impact. But what's driving this predicted recession? It's a complex mix of factors. From trade tensions and internal economic policies to global events that disrupt supply chains and consumer confidence, each element plays a role in slowing down these economic giants. And let's not forget the EU, already predicted to be in the throes of a recession. This isn't just a regional issue, it's a global domino effect. Imagine this scenario. As these major economies contract, demand for goods and services declines, investments shrink, and job markets tighten. This isn't just about numbers on a financial report. It's about real people, businesses, and livelihoods. Rickards isn't just painting a picture of economic charts and figures. He's highlighting a scenario that could affect jobs, incomes, and the global standard of living. Now, let's delve into a crucial factor that could turbocharge the 2024 economic landscape: skyrocketing oil prices. Rickards throws a spotlight on the potential for oil prices to soar to a staggering $150 a barrel. But why does this matter so much? Oil isn't just another commodity, it's the lifeblood of modern economies, fueling everything from transportation to manufacturing. Picture this. As oil prices climb, the cost of virtually everything starts to creep up. Transport becomes more expensive, which means the cost of goods on the shelves goes up too. It's a chain reaction that hits consumers directly in their wallets. But Rickards' analysis goes deeper. He suggests that while initially this might seem inflationary, the long-term impact could be quite the opposite. High oil prices can act as a brake on economic activity. As people and businesses start spending more on essentials like fuel, they cut back on other expenses. This reduced spending can lead to a slowdown in economic growth, potentially pushing economies towards recession. It's a precarious balance. And Rickards' prediction of $150 oil sets the stage for a dramatic economic scenario in 2024. Let's shift our focus to the stock market, a realm where fortunes can be made or lost in a blink. Rickards doesn't mince words about the potential turmoil ahead. He foresees a harrowing slide in stock markets, likening the possible scenario to the infamous 1974 oil shock. Picture the Dow plummeting, possibly by as much as 30% to 50%. This isn't just a minor correction, it's a nosedive that could wipe out significant market value. Why such a stark prediction? It's all about connecting the dots between economic health and market confidence. In a scenario where major economies are grappling with recession and oil prices are soaring, investor confidence can evaporate quickly. Companies' profits shrink, consumers spend less, and the economic engines that drive market growth start to stutter. This potential market crash isn't just a number on a screen. It affects retirement funds, investment portfolios, and the financial security of millions. Rickards is waving a red flag, cautioning investors to brace for what could be a tumultuous period in the financial markets. It's a reminder that the stock market, often seen as a barometer of economic health, is facing a storm that could reshape financial landscapes. As we navigate through these turbulent economic forecasts, let's turn our attention to commodities, an often overlooked yet crucial piece of the financial puzzle. Rickards offers a nuanced view here, predicting a mixed bag for commodities in 2024. On one hand, we have basic commodities like copper, iron ore, coal, and non-precious metals, along with agricultural produce. Rickards suggests these might face a downturn as the looming recession unfolds. It's a simple equation of supply and demand. As global economies slow down, the need for these raw materials diminishes, pulling their prices down with them. But there's a twist in the tale when it comes to precious metals. Gold and silver, often seen as safe havens in times of economic uncertainty, are predicted to buck the trend and perform well. In a world of financial instability and market volatility, these metals could become the go-to for investors seeking stability. This contrast in the commodities market is a key indicator of the economic undercurrents at play. While some sectors struggle under the weight of a global recession, others find their footing, offering a glimmer of resilience amidst the economic storm. Rickards' insight here is a valuable guide for those looking to navigate the complex world of commodities in a challenging economic landscape. Next, we delve into a topic that could shake the very foundations of our financial system. The ominous banking crisis stage 2000 as predicted by Rickards. He warns of a looming crisis, particularly in the realm of mid-sized regional banks, those with assets ranging from $200 to $900 billion. These are not the colossal, too-big-to-fail banks, but their potential downfall could still send shockwaves through the economy. Imagine a scenario where these mid-tier banks, integral to local and regional economies, start to falter. This isn't just about a few financial institutions struggling. It's about the ripple effect it could have. When these banks face crises, it's not just their own operations at risk, but also the myriad of businesses and individuals who rely on them for loans, savings, and financial services. Rickards highlights that crises like these can spiral quickly, with losses extending far beyond the initially affected banks. The contagion can spread, posing a threat to the global financial system. This isn't fear-mongering. It's a stark reminder of the interconnectedness of our modern banking system, where trouble in one area can spell danger for the entire network. It's a call to be vigilant and prepared for potential upheavals in the banking sector. As we peer into the future of banking, a critical element comes into play: the delicate balance of liquidity and risk. Rickards sheds light on this often overlooked aspect, crucial for understanding the dynamics of the banking sector. Liquidity, the lifeblood of banking, is not just about the cash reserves or balance sheets. It's deeply intertwined with the perceived risk within the banking system. Consider this. When banks feel confident about the economic landscape, they're more willing to lend, circulate money, and create liquidity. This is when the economy hums along smoothly. However, when uncertainty looms, when risks seem to lurk around every corner, banks become cautious. They tighten the taps, hold back on lending, and in doing so, can inadvertently throttle the very liquidity the economy needs. In the context of Rickards' predictions, especially with potential regional banking crises, this risk perception becomes critical. Such crises can heighten the sense of risk, causing banks to pull back, drying up liquidity even more. This isn't just a theoretical concern. It's a practical reality that can impact businesses, consumers, and the entire economic system. It highlights the need for a robust, resilient banking system, capable of weathering storms and maintaining the flow of financial lifeblood. As we wrap up our exploration of Jim Rickards' 2024 predictions, let's take a holistic view of the overall economic outlook. Rickards paints a picture of a year fraught with challenges and uncertainties. We're looking at a landscape where major economies could teeter on the brink of recession, oil prices may skyrocket, and the stock market could face significant turbulence. This isn't just about numbers and forecasts. It's about the real impact on everyday lives. Consider the potential scenarios. Jobs could be at risk as businesses tighten their belts in response to economic slowdowns. Your daily expenses, from fuel to food, might see an uptick, straining household budgets. Investment portfolios could feel the heat of market volatility, affecting financial plans and future security. But it's not all doom and gloom. In times of uncertainty, opportunities arise. Smart investment strategies, diversification, and a keen eye on market trends can help navigate these turbulent waters. Rickards' outlook serves as a reminder of the ever-changing nature of our global economy and the importance of staying informed, adaptable, and prepared. As we step into 2024, it's crucial to be aware of these potential shifts and plan accordingly for a financially secure future. As we conclude, remember 2024 holds potential economic challenges, but also opportunities for savvy financial moves. If this insight was helpful, please hit the like button and share your thoughts in the comments. For more essential updates on finance, investment strategies, business ideas, and more about financial education, make sure to subscribe and ring the notification bell. Stay ahead in the ever-evolving financial world with us.